Today, we will talk about lookalike contracts. Lookalike contracts are a type of cash-settled financial product that are based on the settlement price of a similar exchange-traded, physically settled futures contract. They are traded over the counter and do not involve any risk of actual physical delivery, regardless of the terms of the underlying futures contract. Essentially, they are a type of options contract, where the underlying asset is a futures contract with a specific settlement date. These contracts may be offered in both American and European styles, and are regulated by the Commodity Futures Trading Commission. Lookalike contracts are essentially options where the underlying is a futures contract with a specific settlement date. For example, the ICE Brent Crude American-style option product has an ICE Brent Crude futures contract as its underlying. The contract terms of a lookalike contract closely correspond with the contract terms of the futures contract. Lookalike contracts may be offered in both American and European styles. Lookalike contracts become interesting when they cover contracts traded on different exchanges, allowing the exchange to capture some of the trading activity on a commodity they are not known for. This can allow some speculation to take place away from the actuals in the underlying futures contracts, and allows position limits meant to temper commodity speculation to be skirted. Lookalike contracts have critics who argue that they do not contribute to price discovery and can fuel speculation and generate market inefficiencies since they are removed from the underlying asset that they track. Traders of lookalike contracts argue that their volume and open interest provide market information on their opinions of the price performance of the underlying futures contract. Here are 3 key takeaways. 1. A lookalike contract is an OTC derivatives contract that is cash-settled that has otherwise similar specifications to a physically settled futures contract. 2. Because physical settlement is not an issue, traders do not have to worry about closing out open positions to avoid making or taking delivery. 3. Critics argue that lookalike contracts fuel speculation and generate market inefficiencies since they are removed from the underlying asset that they track. Hope this would help. Thanks for watching.